Good morning, guys. We're looking at gold and we're looking first at the weekly chart. Now, bear with me because I'm going to put the fibs on where I think you should put them on. Some people will take them from there to there. I don't. I take them from when did the move start? The move start for me, this last move, was there. So that's why I place my fibs there, thus. Now, last week we had a key reversal week. Not good, not great for gold. You can't ignore a key reversal week. Now, this does not have to signify the end of a trend. What it's doing, it's saying to you, look, since here, we've been on one-way street. We've done a typical gold characteristic of the market. We've gone up, we've consolidated, we've gone up again. My 1603 target that I've given you many weeks ago, many months ago, was taking the whole of the weekly chart base where we just went sideways for 6 years, and the break point of 1380 I measured from the low of that band to 1380 and projected those targets, that minimum target, up. Now you can see from 1380 to 1560 gold has had a big rally. Now it's looking tired. Can you see that? The RSI is beginning to turn. The weekly stochastics are beginning to turn. And we have this key reversal week, which is the first one we've had since we started this move back here, okay, in May. So you can expect the market to be choppy when we're up here because you're vying the bulls and the bears. It's like, who will win? Looking at that chart, the weekly, I'm for the bears at the moment. Do I think gold's going to fall out of bed? No. I think there's a very good chance that we will come back and we will test 1478 first. If we break through this 9-week moving average, okay, at 1484, and we stay there, we're going back to this. Now that is 1447 and 1452. So that area at the 38.2 is where we should end up if we're still going to be in a bull run. If we break it and say below it, it could be sayonara gold, we're going back down to here. But let's take a look at the daily chart. Okay, so on the daily chart, quite clearly, you can see the double top. It's not a massive double top, but it is a double top nonetheless. You can see on the daily all this congestion area around that 23.6 fib. And if you just eyeball it, you've got 1493, 1494, 1490, 14 blah blah blah. So all around here is where the market should aim for. Now what we look for is this. In a strong uptrend, the market should not retrace more than 38.2. That's it. That's fact. If you look at how the stochastics reacted when we had that big move down on the 5th, you can see why they went the way they did. They just fell. But look, as we moved higher, the stochastics moved lower. Okay, so by the time we got to make that double top, we could clearly see the divergence on the chart that was occurring in August, and it did alert us to the fact that the market could should, correct, retrace, whatever you want to call it. So that little double top over there signalled to me end of. Now, we did go short on Friday. We did get stopped out. We did go short again. And at the moment, that's not looking too bad. I think the market still goes lower. I think that we should stay now below the 15, 16, 15, 18 area. If you look at the 21-day moving average, that is coming in at 15.19. If you look at the 9-day moving average up here, that is coming in at 15.28. On another chart that I've got, I had a 38.2 fib coming in at 15.25. So, if you're not already short, there are two areas that taking a small position should keep you safe. One, you sell to the 15, 16, 18 area. Two, you add to shorts up at, if it gets there, 15.24 to 26. Your stop on all shorts are going to be above here. Okay, so we're looking at, and we've got to do it these days, guys, because the market moves in such a way that really you've got to put wider stops these days. I know it's horrible, and I know most don't like it, but if you don't want to get chopped, churned and turned, this is the way you play these markets. You cut down your size and you widen your stops. Now, for gold to go down to 1478, 1462, whatever, it's worth the risk. We're always looking for risk-reward trades. Selling gold up here is a good risk-reward trade. Close your eyes, press that button, and you know where you're wrong. Is the market going to take out 1555, 1556 at the double top? I would think it unlikely given the weekly charts that we've just seen. But look at your daily stochastics. If we start to turn bullish on those daily stochastics, you will then know that the market is primed to resume its uptrend. And bear in mind, this is fact, gold is in an uptrend. It is. Gold's been in an uptrend for years and years. And once we broke through 1380, the market flew. You can see on the weekly chart, it just flew. We need consolidation. We need correction. And that's all it is. Is gold going to run back below 1380? I think no, not at all. But I am aware that even though I think gold is bullish, I'm aware of the double top, and I'm very aware of the key reversal week, and you have to be too. Okay, that's it. Short-term gold has got support 1500, 1502, 1500 and 1498. All right. Then you've got that 1489. So that's what we're playing with. Okay. Good luck. I'll catch you on the desk when you all wait.